Hello. With the COVID-19 economic downturn and with Britain leaving the EU, it's a challenging time for many small businesses. Having readily available money is essential to keep your business afloat in lean times. You should be taking steps now to sort your cash flow and working capital ready for growth in 2021 as the economy bounces and we adjust to the new Brexit era. In this video, I'll provide some tips to help you manage cash flow during COVID-19, save and boost your working capital. Before we make a start though, subscribe to this channel to get loads more accounting tips. I'm Tanya Bennett, founder of North Star Accounting. We provide tax and business advisory services for small businesses and individuals. Today we're covering cash flow and working capital. But if there are any other topics you'd like me to cover, just drop me a line and let me know. Let's start with what the difference is between cash flow and working capital. Cash flow refers to the money that flows in and out of your business. A positive cash flow means you have more money coming in than out over a period of time. You improve cash flow in a number of ways. Firstly, by increasing sales, reducing expenses and overheads, selling an asset, collecting payments more quickly from customers, and finally, delaying your payments out to your suppliers. Most businesses will adopt a mixture of these to create a positive cash flow. So what's working capital then? These are the liquid assets that your business has on hand. This means that they're assets that can be readily converted into cash if required. In accounting, you calculate working capital by deducting the liabilities, and that is money that the business owes, from its assets. And if the result is negative, this indicates that your business may not be able to honour its short-term financial obligations and your working capital is inadequate. Your working capital is increased by increasing profit, or an injection of cash from shareholders, or taking a loan. The two concepts are quite similar, but they are different, and if a business has either insufficient cash flow or inadequate working capital, then it's likely to be a sign of trouble. Let's talk through some practical steps now to boost your cash flow and increase your working capital. Some of these tips are quite straightforward, and every business, whether large or small, should be doing these anyway. Firstly, make sure you monitor your cash flow daily or at least once a week. Your online accounting software such as QuickBooks, FreeAgent or Xero will help you do this, and they will allow you to track invoices, chase customers, to ensure they pay you on time and remind you to pay your bills at the end of the payment window. Next, you make sure that you've reduced expenses and overheads as much as possible and that you're on the best tariffs for your business. Note, this may not be the cheapest, but they may offer you the best value and the best fit for your company. For example, banking, foreign exchange, utilities, broadband, etc. Make sure you're on the right package. If you know you're likely to use an overdraft, make sure your bank has low overdraft charges. If you have forex transactions, check the fees and the FX rates used. There is a perception that switching banks is difficult, but it's not, it's easy. The direct debits and standing orders transfers are dealt with on your behalf. And finally, check you don't have outgoings that you no longer need. Are you still using an app or software that you used to use but you don't anymore? And if that's you, cancel it. Next, negotiate longer payment terms with the supplier, especially if you've got a large order or a line of credit. You can sell unused assets for equipment that you no longer use, inventory that's about to become obsolete. Cash it in while you can. And if you need new expensive kits such as computers, production equipment, lease them rather than buy them. Most lease costs incurred by small businesses can be expensed. If you're renewing them with the same provider, you might be able to get better terms. Okay, so what else have we got? There are more, bear with me. You can promote early payment of invoices by emailing them to customers rather than posting them. We do still have customers who post invoices to clients even today. And it may sound obvious, but check that you've got the right email and try to copy in at least one other person or email address so you know that your invoice is definitely received. And another obvious point, but it matters, is make sure you send the invoice as soon as the work is completed. Don't delay. Yeah. To encourage customers to pay you quickly, you could offer an early payment discount. But if you do your sums first to make sure the discount isn't too much and it doesn't cost you money in the long run. For larger contracts, you could take a deposit up front and at various points during the delivery. Don't wait for 100% of delivery to be complete before asking for payment. And if you're providing a service such as a training course, Ensure you have take payment up front, or at a minimum take a mobile payment processor with you and take payment there and then. Don't leave without payment. Take a look at iZettle or Square payment processors for this. At the moment, you could use HMRC time to pay arrangements available due to the coronavirus pandemic. With time to pay, you spread your tax liabilities over a longer period of time, and HMRC charge just 2.6% interest, which is lower than most commercially available loans. So definitely worth taking a look at. Alternatively, you could take out a business credit card and use your overdraft if you need to. If you are in the fortunate position of having cash balances in the bank, make sure they're put to work for you. Interest rates are low, so you may need to look at alternatives to invest that cash to make sure you get a return for you. However, a word of caution, make sure you keep enough working capital in the bank in case of an unexpected event. We recommend you need at least 3 months of outgoings as cash reserves in the company to provide that safety cushion. Okay, so there are other options available for financing, which are a little more involved. You could consider invoice factoring, and this is where you borrow money against unpaid invoices. Or you could look at asset refinance, where you sell and lease back your equipment. If you're dealing with international buyers and suppliers, you could look at trade finance. And if you have outstanding R&D, which means research and development tax credits, owing to you that HMRC have been really slow to process, you can fund the tax credit with a tax credit loan. This loan uses your future R&D tax credit payments from HMRC as a security, and this allows you to receive the funds much sooner rather than waiting several months for HMRC to pay out. Now, financing options are really quite extensive, and there's no shortage of financing firms out there vying for your business. Okay, let's have a recap of the key tips for you. You will need to monitor and understand your cash flow. You need to be prompt with your invoices. You need to make it easy for customers to pay you, and you need to chase down those overdue invoices regularly. Review your expenses and overheads to trim any excess and identify where value isn't being received. And have readily available borrowing, such as a business credit card or an overdraft, in place just in case. Okay, you should sell those unused assets or unrequired inventory and lease. Don't buy if you don't need to. Use HMRC's time to pay arrangements if it's suitable for you, and if that doesn't work, consider other financing options if the above don't cut it. Talking to your customers and suppliers about how they're managing their cash flow during COVID-19 and Brexit, and understanding its impact on them will be helpful to you as you try and manage your own cash flow challenges. We are all in this together. Providing support fosters great working relationships and may be beneficial later on. In addition, you may find it presents new opportunities to you if you can identify customers who are already having issues with other suppliers. So what next? You need to make some time to appraise your own business and objectively look for opportunities to improve your cash flow. Do it now, before you face the COVID-19 or Brexit-induced cash crunch. So hopefully you found those tips on how to improve your business cash flow helpful. If you'd like some help with your cash flow or any other accounting services, do get in touch with us at northstaraccounting.co.uk, or you can email us at info@northstaraccounting.co.uk. We would love to hear from you. And if you like the tips I've outlined, give this video a like and subscribe for the channel for more advice on all things accounting. Thanks for your time today. Goodbye.